Did you know that escaping poverty can start with just $500? Yes, it seems difficult, but the truth is that you don't need thousands of dollars or an inheritance to transform your financial life. What you really need is a clear plan, practical knowledge, and the right mindset. Many believe that financial freedom is out of reach, that it is a privilege of a few, but this is nothing more than a myth. With just $500 and the correct strategies, you can take the first step to turn the game around and, over time, create a system where money works for you. Now think a little wizard. How many times have you heard that earning more money is the only solution? What if I told you that the secret is actually in how you manage what you already have, and earning more is just a consequence? It doesn't matter if you're starting from scratch. The path to financial freedom is open to everyone, but you need to know the right steps. And that's what I'm going to show you today. The journey to achieving financial freedom can start with a simple step: saving the first $500. It may seem like a small amount at first glance, but think of it as the foundation of wealth. It's the first brick you lay to build something much bigger. With these $500, you begin to create the habit of saving, which is crucial for accumulating wealth in the long term. The sense of security that comes from knowing you're starting to build your own financial reserve is a sign that control is in your hands. Now, the important thing is not to underestimate the impact of this amount. With a well-crafted strategy, this small sum can be multiplied. Imagine you decide to invest these $500 in something simple and accessible, like a low-cost stock index fund. Over time, thanks to the power of compound interest, these $500 can grow much more than you imagine, especially if you continue to contribute regularly. In other words, it's not just about saving, but about making money work for you, generating dividends that can sustain your financial growth. And of course, this first step is just the beginning. What comes next is equally important: learning to direct this initial saving intelligently without getting lost along the way. From the moment you save these $500, your mindset begins to change. Suddenly, you realize that controlling your finances is possible, that it's not just about cutting expenses, but about planning for the future. And speaking of planning, that's where financial education comes in, the next step in building your financial freedom. After saving the first $500, the next step is to invest in something even more valuable: knowledge. Warren Buffett, one of the greatest investors of all time, always mentions that the best investment he has ever made was in his own financial education. Reading books, taking courses, understanding how money really works. All of this is essential for those who wish to achieve financial freedom. It's not just about understanding numbers, but about learning to make informed decisions that will shape your future. Financial education may seem abstract at first, but it offers very concrete returns. When you understand how the markets work, how to avoid pitfalls, and how to seize the best investment opportunities, you are equipping yourself with the necessary tools to grow. Something simple, like learning the difference between active and passive income, can already transform your perspective. This knowledge prevents you from relying solely on a salary and opens doors to smarter ways to increase your wealth, such as dividends from stocks or interest on fixed income securities. And it's important to remember that learning about finances is not a task you do once, and that's it. Financial education is ongoing. With the investment world constantly evolving, there is always something new to discover. In addition to books, the internet offers free courses and online seminars that can be great allies in this learning process. The most interesting thing is that the more you learn, the more confident you feel about your decisions. And this brings us to the next point: the best books that can serve as your first guides on this learning journey. Now that the concept of financial education has been introduced, it's time to mention some works that are true treasures for those who want to understand more about the subject. One of the most recommended books for investors of all levels is The Intelligent Investor by Benjamin Graham. This classic work gets straight to the point about how to analyze investments with a long-term mindset, avoiding emotional decisions that could compromise your wealth. Graham introduces the concept of value investing, a strategy adopted by Warren Buffett, which seeks to identify undervalued stocks with great growth potential. Another book that deserves mention is A Random Walk Down Wall Street by Burton Malkiel. This is perfect for those who want to understand in a practical way how the market works, without getting lost in complicated jargon. Malkiel advocates the idea that trying to predict the stock market is like taking a random walk that is almost impossible. He suggests a more passive approach, such as investing in index funds, which over time have proven to be one of the most effective strategies for accumulating wealth. These two books are just the beginning of a vast learning journey. It's not about reading for the sake of reading, but about absorbing the knowledge and applying it to your decisions. What you learn in them can directly influence how you will invest your money, whether by choosing stocks, funds, or any other type of investment. Reading these books is like receiving direct advice from great financial masters, and the next step in this learning process is to find someone who can offer that guidance in a more personalized way. After dedicating yourself to reading and financial education, one of the most effective ways to accelerate your progress is to find a mentor. An experienced mentor can offer advice, prevent you from making common mistakes, and, most importantly, help you shape your mindset for success. Imagine being able to discuss your ideas and strategies with someone who has already walked the path to financial freedom. This guidance can make a significant difference, especially when you are starting out and still don't know how to handle all the nuances of investments. Finding a mentor can be simpler than it seems. Nowadays, many professionals share their experiences in seminars, webinars, and even on social networks. The important thing is to be attentive to these opportunities and maintain a mindset of continuous learning. Additionally, it's worth considering participating in specific courses or in finance discussion groups, where you can meet people who share the same goals and, who knows, find someone willing to be your mentor. Of course, learning shouldn't stop there. The financial world is constantly changing, and staying updated is essential for making informed decisions. Therefore, continuing to invest in online courses and workshops is a way to ensure that you are always ahead. Debt is one of the greatest enemies of financial growth, especially those with high interest rates, such as credit card debts, which can turn into a snowball. Wizard, if you really want to get out of this hole, the first step is to face these debts head-on and eliminate them once and for all. Paying the minimum bill every month may seem like a solution, but in reality, it keeps you trapped in a continuously growing debt. Imagine that credit card interest rates can reach over 20% per year, a rate that can erode your wealth before you realize it. The key to breaking this vicious cycle is to focus on paying off your debts, prioritizing those with the highest interest rates. A popular strategy is the snowball technique, where you start by paying off the smallest debts first, which gives you a sense of accomplishment and motivates you to continue. Another technique is the avalanche, where you pay off the debts with the highest interest rates first, saving more in the long run. Regardless of the strategy you choose, the important thing is to tackle this issue with discipline. After all, there's no point in investing and seeking passive income if a large part of your money is being drained by high interest rates. Paying off debts not only frees up your cash flow, but also provides a sense of freedom that goes beyond the financial. Without the shackles of debt, you can focus on building a reserve, investing in passive income, and finally approaching the much-desired comfortable retirement. But before getting there, it is also necessary to review your spending habits and learn to minimize unnecessary expenses, an essential step on the path to financial success. Once debts are under control, the next crucial step is to learn how to reduce unnecessary expenses. Living paycheck to paycheck is a reality for many people, but it creates a cycle of stress and financial dependence that needs to be broken. The key to breaking this cycle is to develop the habit of living below your means. This does not mean sacrificing quality of life, but rather making conscious choices about where and how money is spent. For example, choosing to cook at home instead of eating out or reviewing subscription services that you might not even use anymore. The practice of minimizing expenses not only relieves the budget in the short term, but also frees up space for you to invest more. Imagine that by reducing $200 in monthly expenses, that amount could be directed to an investment fund that, over time, can generate dividends and contribute to your passive income. The shift in mindset from consumer to investor is one of the central points for those who wish to achieve financial freedom. Small savings, when added up over time, can make a huge difference in your wealth. And it's not just about cutting costs, it's also about increasing your income. Seeking additional sources of income can further accelerate this process. Whether through freelance work, creating a side business, or even investing in skills that increase your salary in your current job. The important thing is to always look for ways to maximize your earnings while keeping expenses under control. With this mindset, you will be ready to adopt one of the most effective strategies for wealth creation, the much talked about passive income. The next step in building your financial freedom is to invest intelligently, and for many, the best way to start is with what is called passive income. The idea here is to make your money work for you, not the other way around. Investing in index funds, for example, is an excellent option for those looking to accumulate wealth long-term without having to worry about active portfolio management. With these funds, you are automatically diversified, investing in multiple companies with a single asset. And the best part, over time, you benefit from the power of compound interest, where profits generate even more profits. Index funds, such as the S&P 500, are particularly popular in the United States because they offer exposure to hundreds of large companies at a low cost. Over the years, these funds have consistently outperformed many other, more active forms of investment. Additionally, the beauty of passive income is that you don't need to spend hours studying individual stocks or trying to predict market movements. Time and patience are your greatest allies. As you hold on to your funds, they grow and simultaneously generate dividends. By adopting this approach, you put your wealth-building journey on autopilot. But it's important to remember that passive income requires time and consistency. Even if the returns are not immediate, the long-term effect can be impressive. And speaking of safe investments, it's worth considering another form of investment that can offer both stability and tax benefits. Municipal bonds, an alternative that many more conservative investors use to balance their portfolios. Municipal bonds are a safe option for those seeking stability in their investments, especially if you have already started exploring passive income. These debt securities are issued by local or state governments to finance public projects, such as roads or schools. The great attraction of municipal bonds is that in many cases, they offer yields that are exempt from federal taxes, and sometimes even from state and local taxes, depending on where you live. This means that the real return can be higher than that of other investments with a similar interest rate. For the investor seeking security and not wanting to take on significant risks, municipal bonds are an excellent addition to the portfolio. Imagine investing a portion of your initial $500 in a long-term municipal bond. In addition to receiving regular interest payments, you will also be contributing to the development of your community, which brings a sense of social responsibility. While stocks and other investments can be volatile, municipal bonds offer a stable income stream, perfect for those seeking diversification and peace of mind. In addition to security, these bonds allow the investor to combine growth with protection against market volatility. If you are looking to balance your portfolio with low-risk assets and the potential for steady returns, municipal bonds are a great choice. However, as important as it is to protect your investments is ensuring that they grow efficiently. And that's where tax-advantaged savings accounts come in. Maximizing the growth of your investments is the next step to achieving financial freedom, and tax-advantaged savings accounts, such as the TFSA, Tax-Free Savings Account, or the RRSP, Registered Retirement Savings Plan, are powerful tools in this process. These accounts allow you to grow your money without the bite of taxes, meaning that earnings accumulate more quickly and efficiently. Imagine having an account where your dividends and interest grow without the government taking a cut. It's exactly what these accounts provide. The TFSA, for example, is an excellent choice for those who want the flexibility to use the money before retirement. In it, you can invest in stocks, funds, and even municipal bonds, and all growth, whether through interest or dividends, is completely tax-free. The RRSP, on the other hand, although it requires you to keep the money until retirement, offers current tax benefits since contributions can be deducted from your income tax. In both cases, the long-term effect of letting your money grow without the interference of taxes is remarkable. The most important thing is to use these tools strategically, planning when and how to withdraw the money to maximize tax benefits. This way, you can keep more of your wealth in your pocket, which is crucial for those building a retirement plan. These tax-advantaged savings accounts are just one of the steps on the path to financial independence. And for those who want to accelerate this process even further, an alternative that many consider is investing in their own business, something that can completely transform their financial trajectory. Investing in your own business can be one of the fastest ways to transform that initial $500 into something much larger. The digital world offers countless opportunities for those who want to venture into entrepreneurship with little capital. From opening an online store, selling products on platforms like Amazon or Etsy, to offering freelance services such as graphic design, writing, or programming, there are a myriad of options that can generate income and eventually financial freedom. The important thing is to find something you enjoy doing and that has market demand. With the growth of e-commerce and digital platforms, entrepreneurship has never been more accessible. Imagine investing those $500 in creating a small dropshipping business, for example. You don't need to stock products, and with the right digital marketing, you can start seeing the first profits in a few months. Another example would be using those $500 to create an online course or a YouTube channel, monetizing your skills and knowledge. With dedication and planning, the earnings can become exponential, turning a small amount into a consistent source of passive income. But of course, entrepreneurship requires focus, discipline, and the willingness to reinvest profits into the growth of the business. This reinvestment mindset is fundamental to ensure that the business continues to grow and sustain itself in the long term. Many successful entrepreneurs started exactly this way, with a small capital and a big vision. Let's move forward, Wizard. One of the greatest secrets to sustainable financial growth is reinvestment. When you start seeing your first profits, whether from an investment, dividends, or even your own business, the temptation to spend on luxuries can be great. However, reinvesting those earnings is the key to accelerating your growth. Every dollar you put back into your investments is working to multiply your wealth even more. This creates the powerful snowball effect, where gains generate more gains, amplified by compound interest. Imagine that you have invested in an index fund or dividend-paying stocks. Instead of using those dividends for small indulgences, you can reinvest them into the same fund or new stocks. Over time, this increases your investment base, generating even greater returns in the future. Similarly, if you are managing a business, reinvesting part of the profits into improving processes or expanding product offerings can accelerate the growth of your company, making it more profitable in the long term. This cycle of reinvestment creates a growth mindset, where the focus is on the future, not the present. The important thing is always to think about how today's money can work for you tomorrow. Of course, it is also essential to have a balance, ensuring that you are prepared for any financial unforeseen events. And that is where the importance of having an emergency fund comes in, an essential protection to keep your financial journey safe. As important as it is to focus on financial growth and reinvest profits, we can never underestimate the importance of having a reserve for emergencies. Building an emergency fund is like creating a financial shield against unforeseen events. Life is full of surprises, a job loss, an unexpected medical expense, or even an economic crisis. Having a reserved amount, equivalent to 3 to 6 months of your basic expenses, ensures that you do not have to resort to loans or dispose of your investments in difficult times. This fund does not need to be built all at once. Just as you started with the first $500, you can allocate a small portion of your monthly earnings to a specific savings account, intended only for emergencies. The important thing is that this money is easily accessible, but not so close that you feel like using it for anything. A practical tip is to keep this amount in a high liquidity savings account, but one that also offers a reasonable return, such as a money market account. Financial security is composed of several layers, and the emergency fund is the base that supports the rest. By having this reserve, you can proceed with your investments and growth strategies with much more peace of mind, knowing that you are protected against unforeseen events. Now that this part of your financial life is under control, the focus can return entirely to making your money grow and, who knows, achieving the much dreamed of financial independence. Wizards, now that you already know the essential steps to escape poverty, the question is, how are you going to transform this knowledge into results? Knowing the path is not enough. You need to take the first steps. How many times have you found yourself thinking about how good it would be to have more money or to get rid of financial worries? This is your chance to change that. The difference between those who achieve financial independence and those who remain stuck in the routine is action. Will you continue to let excuses dominate, Or will you start building your future starting today? Reflect. What are you going to do now with these $500? Will you apply what you've learned or let the opportunity slip away? The decision is in your hands. Wizard, this is just the beginning. If you really want to change your financial life, you need to follow the steps. Subscribe to the channel and activate notifications because knowledge is your weapon. Let's turn this plan into reality together.